Hey everyone, welcome back to Corporate Dakota, the place where we break down the nitty-gritty of company filing so you don't have to. And today we're diving into Texas Mineral Resources Corp. August 11th, 2025 report. Get ready because it looks like this company might have been doing some serious shuffling behind the scenes. So what's the big story here? It seems like Texas Mineral Resources Corp has been busy dealing with some debt, those agreements that companies make to borrow money. They had some loan agreements back in February and apparently all the debt from those agreements has now been paid off. It was a pretty significant amount, over $1 million, and it's all been converted into company stock. Now, this report is dated August 11th, 2025, and it's signed by William Chris Mathers, the Chief Financial Officer. This is pretty standard stuff for an 8K filing, which is basically a report for major events that happen outside of the normal reporting schedule. Let's rewind a bit to February of 2025. The company had announced that they got into some loan agreements. Specifically, they agreed to borrow $848,000. This money was going to be convertible into shares of their common stock. Think of it like this. Instead of paying the loan back with cash, the people who lent them the money could choose to get shares in the company instead. The conversion price was set at Gorda 30 per share, so they're common stock. Think of it like this. Instead of paying the loan back with cash, the people who lent them the money could choose to get shares in the company instead. The conversion price was set at 0.30 cent per share. But that wasn't all. Just a little later in February, on the 18th, they entered into even more loan agreements, and by the 20th, they had closed on another $250,000. So in total, from these February deals, we're looking at over $1 million in debt, $1,098,000 to be exact. This was all laid out in previous 8K filings. Now fast forward to August of 2025. The crucial part of this report is that all of that debt, that $1,098,000, has been converted into company stock. The holders of these notes, which is just another word for the loans, decided to take shares instead of cash. They converted them into 3,660,000 shares of common stock. The conversion happened at that previously agreed upon rate of 0 per share. Most of this conversion happened very recently, between August 6th and August 9th, with a chunk also happening from July 28th to July 31st. This means this report is essentially updating everyone that this significant chunk of debt is now off the books, replaced by a larger number of shares floating around. Now, here's an interesting kicker. When these loans were first made, the lenders didn't just get the promise of repayment or conversion. They also received warrants. Think of warrants as options to buy stock in the future at a set price. In this case, these lenders got warrants to buy up to a massive 10,980,000 shares of common stock at $0.13 per share. These warrants are still outstanding, meaning these lenders could still potentially buy a lot more stock if they choose to. There's another bit of information here about shares being issued. Back in July, the company gave out about 164,000 shares of its stock to its directors. This wasn't a sale, it was instead of paying them their fees in cash. So they're rewarding their own people with stock. The report also touched upon unregistered sales of stock, essentially saying that the shares issued both from the debt conversion and to the directors were done in a way that didn't require public registration. They relied on exemptions, which is common for private placements or transactions with a limited number of sophisticated investors. This is a legal way of saying they followed the rules for selling stock without going through the full registration process with the authorities. So digging into this, what's happening at Texas Mineral Resources Corp appears to be a financial cleanup and restructuring. They've taken on debt, a significant amount, and instead of repaying it with cash, they've converted it into stock. This dilutes the ownership of existing shareholders, meaning each share represents a smaller piece of the company. However, it also removes the debt obligation from their books. The fact that all the warrants are still outstanding is important. These warrants give the original lenders the right to buy even more stock at a low price. If the company does well and its stock price goes up significantly, these warrant holders could exercise their options, potentially flooding the market with more shares and driving down the price. It's definitely something for existing shareholders to keep an eye on. In this filing, the focus is really on the extinguishment of this debt through stock conversion. It's a clear move to clean up the balance sheet. However, the issuance of those warrants suggests a past strategy to incentivize lenders, the long-term impact of which is still playing out. Without more context on the company's operational performance or revenue, it's hard to say definitively if this is a brilliant move or a sign of underlying financial strain. It definitely signals a significant shift in the company's capital structure Alright, that's our breakdown of Texas Mineral Resources Corp's latest filing. What's your take on these stock conversions and those outstanding warrants? Do you see this as a positive step for the company's future or a cause for concern? Share your thoughts in the comments below. If you found this deep dive valuable, please hit that like button and subscribe to Corporate Decoder for more. And don't forget to join our Discord community. Linked right in the description for even more discussions and insights. Thanks for watching, and we'll see you in the next one.